Hello, I'm Joyce from FIMM. Welcome to Coffee Talk. It's a show where we have conversations with people from the industry about what's going on in the industry. Joining us today is Encik Ahmed Muzni Mohamed. Encik Muzni is the CEO of Maybank Asset Management Sdn Bhd. Prior to his appointment, he was the CEO of Maybank Islamic Asset Management. Encik Muzni has over 28 years of extensive global and regional capital market experience. Welcome, Encik Muzni. Thank you for being on the show.
Thank you, Joyce. It's a pleasure to be here, and please do call me Muzni, no Encik in front. Okay, let's keep it casual if you don't mind.
Yes, please.
All right.
To be able to set aside savings is already been an ongoing struggle for many Malaysians with the increasing cost of living and diminishing spending power. We have also been told that many in the current era, where many do not have sufficient savings and are living from paycheck to paycheck, as evident in the Ringgit Plus Malaysian Financial Literacy Survey 2023. The results from the same survey have given us an insight that more than half of Malaysian adults have not yet started saving. It's actually very worrying. This is a segue to referencing FIMM's nationwide survey 2019 on the top 3 challenges to invest in unit trust scheme and or private retirement scheme by 3,317 respondents. First one, 55% worry about losses in investing. 52% perceive that the returns are lower than expected.
Okay.
And the third one, and the last one, 45% have limited knowledge of unit trust and PRS.
Okay.
However, I would like to qualify that the results above are based on multiple choice selection from the said respondents, meaning that one respondent would have answered all 3.
Yeah, all 3.
Or
correct.
all 2. So, Encik Muzni, what is your take on the survey findings, and how will you as a fund manager convince investors and non-investors to invest more or to begin with their investment plans?
Well, thank you, Joyce, for that. A very tough question at the very beginning. Let me just say that I think there are some truth to the survey's finding. As you can see, a lot of people, a lot of younger generations especially that I have met, have not even started planning to invest. I won't just call younger generation, even some of the elder generation have not even started investing. Especially in Asia, in this part of the world, investing is still deemed to be a luxury item rather than a necessity that you do every single day. Correctly pointed out, most people, majority of us are living from paycheck to paycheck. So setting aside some money to save itself is a difficulty, let alone to invest. Okay? And again, industry players like us are not making it easy by creating that awareness or education, which is something that I feel truly that we need to do a lot more going forward. To top it all, right now, for the last few years, that we've seen inflation at the highest level. Okay, you see cost of living going up, which translates to spending power going down. Okay, so whatever little bit of money that you have is going to go towards consumption rather than savings and or investment. Okay, now the second bit is how do I then convince, or how do we convince people to start investing? It's not an easy job. I must say, I cannot really say that there is one formula that fits for everybody. But what I can do is, I can tell you my own little experience, how I got myself to invest. Okay? Maybe back then, this is what, 1990s, 30 over years ago, I fell in love with this idea of, like anyone else who are in the early 20s, making money. Okay? How do I make money? All right? And the way I look at it is like, back then you look at capital market and say, oh, those who participate in the capital markets tend to be more affluent than those who do not. So that intrigues me. Okay? So in the early days, I really started to invest directly to the stock market. Okay? Bear in mind, I was an analyst. My first job was an analyst in the sales side in the stockbroking firm. So participating in the stock market is fairly easy because I have access to brokers and whatnot. But the motivation back then was more towards participating in the wealth creation. So you see the country growing and the wealth being grown. How can I participate in that? So buying into stocks that you think are the drivers towards the economy is one way of doing it. Okay, it's not cheap, I must say, because back then I can only afford one lot of something and full stop.
Yeah.
Okay.
And now I think Bursa have made it easier to invest with only 100
unit.
Yeah, exactly.
Okay, as opposed to 1,000 back then.
Back then.
Okay.
Yeah.
So even that was a tough call. But then I realized that that's number one. I felt that I need to participate, and then eventually I realized that I can't be just investing in one stock or two stocks. That's not diversifying my investment. It's like putting everything in one basket. Okay, so hence then moving towards trying to diversify, and then I found unit trust as one of these so-called vehicle that can do that. But coming back to the motivation, first it was trying to build my own, participate in the wealth of the nation, and eventually then the second motivation comes that 10, 15, 20 years later, I was in the, I would say, mid-30s. I realized that, hey, wait a second, despite all this effort, I still feel that I may not have enough to retire. That's the second realization.
Okay.
It's like, if I do nothing, or I just put money in savings, when I'm 60, I felt that it's not enough to at least give me the lifestyle that I wanted to continue. And therefore, I have to look at investing more seriously. And you heard this sandwich generation syndrome, right? I must say, I'm facing it right now. Okay, it's like, we never expect that, by the time I'm 57 now, by the time I'm gonna hit retirement in a couple of years' time, that I would still have to look after my parents and my children at the same time. So that realization happened about 20 years ago, when I realized that I think I need more than what a savings can give. Okay, so that is the real motivation for me to go into investing. Now, everybody would have a different needs and requirement, but one just need to look back at your end goal and say to yourself that by the time I'm 60, what sort of lifestyle do I want to create for myself, and how much money do I need to maintain that lifestyle? That makes everybody would realize that perhaps saving money alone is not enough. Investing is the solution.
Alright, last but not least, this one.
So that's my first answer, Joyce, on that front.
Thank you so much. Because I heard that you started having the passion for investing when you started working. How does it spark your interest when you were a student in a university?
Oh, when I was a student, I had no interest in investing whatsoever. Sorry about this, it may digress a bit. I wanted to be an architect.
Oh, interesting.
Nothing to do with banking or investment and whatnot. But I somehow rather, I got to see, my uncle was in investment world. So I got to see my uncle, and his success story sparks that interest. It's like, wow, you can make a lot of money through investment. So that changed my path into investment, and that's after then I decided to join into a stockbroking firm, and then, as I said, that's the beginning of everything.
Was it your first job?
Yes, my first job, yes. My first job was with Nico Securities as an analyst there.
Wonderful. So then you know the economies of the world and how they participate. That's where you get to participate in the wealth of the world.
Yeah, in a way, yes. In a way, yes.
Thank you for sharing. So since now you know the wealth of the economy, perhaps we can also let the audience know, how does a fund manager generate returns from managing the assets in unit trust and PRS that a normal man in the street cannot do?
Okay, good question. Now, unlike many people, let me just give you my own experience again. I'm not going to say that I am a professor in this, or I can preach on everything. But from my own personal experience, I was an analyst in a securities firm. Okay. So I invested shares of company that I covered, that I know of. So I get to know some of this company, and if it's doing quite well, why not put some of my money in those shares that I cover? So that was the starting point. Now, then I realized that, how many stocks can I cover? It's like maybe 20 to 30 stocks. And he said, is that enough for diversification? Surely not enough. Okay. And that's the fact, even the fact that I have access to information as an analyst, I have access to information more so than any man on the street could have. Okay. I literally analyze company as my job. So it's 24/7 dedicated, unlike men on the street who do it part-time. And yet, despite those facts, I felt that it is not enough. That I cannot have a proper diversified portfolio. Having access and spending my time just doing that is not enough. All right. Then, looking at the fund manager, I said they would probably have more access than I do as an analyst because they are more organized as a structure, as an organization. They split their teams to be looking at the coverage of as many companies as possible. They have access to primary and secondary research more than what I can do my own research. And they have infrastructure that can cover more grounds, more markets than a single person can do. Okay, so as an analyst, I felt inadequate compared to a fund management organization. What more people on the street? Okay, and more importantly, the fund management is divided by specialization. Even you say they are generalists as a fund manager, they are still specializing in at least one country. I'm a specialist for Malaysia, for example. All right, so that is by its own a specialization. What more they can specialize into industry, into sectors, into big cap, small cap companies and whatnot. So I felt that if I, as an analyst who has access to information and who does this as a full-time job, felt that I am nowhere near a fund manager, well, I'm sure men on the street would benefit if they have the service of fund manager. The only real question is that when it comes to fund management and do you have 3 to 4 million to give them to manage your portfolio, right?
Right.
Short answer is no. And therefore, that's why I felt unit trust is the greatest way to get that professionalism and diversification at a fraction of the cost. Okay. I hope that answers your question, Joyce.
Oh, yes, it does. So, in fact, when you mention that you're an analyst, you feel inadequate. Plus, imagine that you are already looking at it 24/7. What not, a man on the street who does not have that kind of time,
luxury,
and
probably they will look at it maybe an hour a day.
Yeah, correct.
Okay? As opposed to me, I'm doing it from 8 o'clock till 8 p.m. looking at the stocks.
Even with your passion and all that, you felt that you do not have the time.
It's not enough. I cover 30, 40 stocks during my prime time. And there are thousands of stocks out there. My 30, 40 stocks is not enough to give me that so-called best options for me to invest in. Okay.
And there's a lot of research and reading as well, apart from you having access to the 2030. What more you need to read even other companies for diversification.
Definitely.
Yeah, so in a way, the audience also must know that a fund manager does extra work, have the expertise and have the infrastructure to help them to manage our money.
Exactly.
Yeah.
Exactly.
Yeah. Thank you. In your opinion, what is your take on UTS and PRS as an investment vehicle to counter inflation?
Okay.
Which is an all-time high now.
Which is what is happening right now.
Yeah.
Well, let's start with inflation. Okay. To beat inflation, you need to invest. Because if you don't invest, you just leave your money in the savings account or even in an FD, you would get probably 3 to 4% per annum. And inflation is actually more than that, despite the headline saying it's about 4% and whatnot. The cost of coffee now and 1 year ago has gone more than 3-4% up.
Even I buy bananas on almost 2-3 times a week, from 4 ringgit a bunch now to almost 9 to 10 ringgit a bunch.
Exactly.
It's actually 100%, in such a short time.
So putting your money in FD getting 4% will not cover that inflationary cost.
Yeah.
Okay. So that's the first thing. You need to generate returns, that is more than the inflation or the higher cost of asset prices. Okay, that's number one. So savings will not do it. Let alone not putting money in the bank, it will be even worse. Okay, so you need to invest. Okay, then second question is that what do you invest in? Okay, there are literally, even if you look at stocks available in Malaysian stock market, there are close to about 800-900 stocks to pick from. If you look at the unit trust itself, there are close to 700 over unit trust, and then PRS over to invest in. And that's just Malaysia. If you look at regional or even global, there are millions to pick from. So how do you invest and what do you invest? Now, all that depends on your own risk tolerance, your own investment horizon, your principles and your values, and then you can dictate what you invest in. But to beat inflation, let me just start from the very beginning. Don't try to invest for 1 year or 2 years or 3 years and hope that can beat inflation. Investment to beat inflation is always over a 10-year cycle minimum. Okay, only then you can see the result of that. It's like buying a property. Do you expect the property price to go up, double over 1 year? No, not really, isn't it? But if you were to buy a property and live it for 10 years, you would easily double or even, sometimes triple the price of the property. So asset prices would go up higher than inflation is what you need to look into. Okay, that's number one. And two, you need to understand your own investment horizon, your own risk tolerance, and your own values. Why they say values is important? To some, they want Sharia principle. To others, it's okay to not have that. So sometimes your principle will then dictate what you can and cannot invest. Now, a fund manager can construct a portfolio that mimics your risk, your investment horizon, and your values into a portfolio of diversified investments. So you wouldn't be putting everything into a basket, not all eggs in one basket. So that's the whole idea, to be able to tailor your needs. The only challenge here is that, as I said, do you have 4 to 5 million to give to the fund manager to create enough securities, diversified securities for you to invest in, to be able to beat inflation. And because you cannot do that, again, I look towards collective investment scheme or unit trust or PRS to be the solution to that. And at a price of a minimum of 1,000 ringgit as a starting point, it is a cheap way to enter into investment. I mean, classically, if you look at investment, most people will tend to look at property as a hedge towards inflation. Again, long term, you can't buy property and expect it to go up over 3 to 4 years. Sometimes property, during recession, properties do come down. But if you keep it long enough, you will have that. But you can't afford to buy 10 houses to diversify your portfolio.
It's very heavy capital
as well. It's heavy capital.
And also it's illiquid also. It's not so easy to sell.
Exactly. So having it in a unit trust, in a collective investment scheme, is where you get the liquidity, you get the diversification. If you decide to redeem, it's T plus 7, you'll get back your money. Okay? So I still believe unit trust is the best vehicle. Investment is the best vehicle to beat inflation, but with regards to affordability and liquidity, therefore unit trust is the best among all investment to beat inflation.
I agree with you.